Good morning. This is Jack from Alpha Charts with a state of the market video. Today is December 24th, 2022, Christmas Eve. Merry Christmas, everybody. If you if you observe. Uh Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, let's get going. It's cold out there, and the market is pretty cold too, right? Again, trend line down, touched many times, declining 200-day moving average. Now we're starting to get bearishly aligned shorter-term moving averages as is. As you can see, there was, I believe, a short opportunity right over here as price came into this, 3870-ish, 38, maybe even 3900, somewhere in this area right there. I have a super follow group, and that is where we got short via the SPXS. And I think that good chance the market is going lower. So seasonally, we're in the Santa Claus rally part of the year, right? The part between Christmas and New Year's, right? Actually, I think it's January 2nd or something. But basically, Christmas and New Year's is the Santa Claus rally, and historically, price movement is positive during this time. So something to watch for. If Santa Claus does not come this week, or if it's a very weak Santa Claus, we'll call break even-ish, that is going to be a potential telltale sign for some really bad weakness going into the beginning of the year. No guarantees on anything, but that's a sign, right? If Santa Claus is real strong this week, markets are up 2, 3, 4, 5%, whatever, that'd be a sign as well, right? So just watch general market strength or weakness this week. Many traders are on, institutional traders are on vacation. So the B teams are in doing the trades this week as well. So we should start to see volume really start to tail off like we did on Friday. I expect this to be a very low volume week coming up. So again, moves can be a little exaggerated, but they're, again, not high volume, high conviction type moves, right? We won't get those until the beginning of the year again. So there we go. SPX downtrend underneath all the moving averages on the week. We had a down of 0.2, so almost break even. RSP down 0.05, again, roughly the same. And you can see bearishly aligned moving averages, just like the cap weighted SPX. This 50-day is going to start, unfortunately, to flatten out again if price can't get back above it. And again, all this progress that we were making now becomes overhead supply. Not real good look right there. Looking at the Qs. We had this potential trend line right there. It broke. And so it's funny, I was looking to maybe get short the Qs, and this bounce just wasn't enough to give me the move I was looking for. So it was not able to get short the Qs, but definitely the weakest of the bunch. Going to a weekly chart, this trend line now is absolutely in play. Let's go from the 2012, I believe it is 2010 lows, right? Hit it 2011, hit it 2015, 16, whatever. Really important trend line right here. It's in play, as well as this 238 area. But first, this trend line right there. Let's zoom into it on the weekly chart just to see what it looks like. Kind of heldish on the weekly chart, but it looks pretty rough. 250, that's a very good possibility. And then below that, 237 on the week. The Qs were down 2.5%, so much worse than the index, than the SPX. And the equal weight's 2.38. So you see broad base selling. The equal weights are underneath all its moving averages as well on the weekly and on the daily. Same thing. They're starting to align bearishly again. A lot of overhead supply now. It's just not a bullish market on the indexes so far. IWM, So here we go. Russell 2000 small cap index, and we're watching this head and shoulders. And so now, now if this completes, and we won't probably know that, maybe it won't complete till January sometime. If it does, it can get really nasty really, really quick, right? So if it completes, which means it breaks down below 163-ish or so, 162, 163, good chance price falls to 127, 128. Doesn't have to, but good chance, right? If this breaks down, again, it won't go straight down, but it looks pretty nasty. By the way, Russell was basically even on the week, which is kind of interesting. Again, smaller volume. But yeah, so I'm looking for, if it breaks down from here, another 20% move down. Again, and maybe it stops here. Maybe it doesn't get all the way there. Maybe 145 becomes a stop. Maybe it's got to, chill out there for a while. Maybe it never gets down there. I don't know for sure, but this is the possibility, right? 20%. Again, but it still has to break down below this, which it has not done yet as well. So, right now it's just kind of hanging out above it. 163, though, that is the line in the sand. If it breaks 163, things could be really, really nasty. All right. But again, just bearishly aligning. IWO, same type of look as IWM, coming over, making this right shoulder, potentially bearishly aligned moving averages. Now we have serious overhead supply again. Whatever bottom, maybe this is the bottom, right? But right now it's not looking like it is, at least not yet. At best, we're in a range. But if this breaks down below, 200-ish, right? This was a false breakdown, but if it breaks back below 200-ish, that could be a problem. Mid caps, MDY. I was still looking for an inverse head and shoulders here. I left it on there because it has not invalidated yet. On the weekly, they were up 0.81, the mid caps, still by far the strongest of all the indexes, by far. So, and we can see that right here, even though it is now below all of its moving averages, I would love to see a quick retake of them. That would be the bullish scenario for the mid caps. So definitely keep that in mind. If you need to be invested somewhere, because you just have to be, the mid caps by far seem like the place to be. So they're holding up reasonably well. And I was joking with somebody on Twitter the other day. Let's look at the monthly chart real fast on SPX. Let's look at SPX. 2 weekly. That here's the COVID low, and it's funny. I was in here waiting for the double dip, right? The second shoot a drop. It'd be ironic, it'd be crazy if we saw that second shoot a drop here, right? Get all the way down there. Now, I'm not calling for that or anything like that. It was more of a tongue-in-cheek joke, but it's kind of funny. It's like I'm still waiting for the double bottom to hit. And could you imagine if we get the double bottom here somehow? That'd be hilarious. Anyway, again, not calling for that, but that would be something that would be pretty crazy. And it would kind of coincide, just kind of crazy how that kind of matches up with that, right? Anyway, not calling for that, and that would be just for fun. Let's look at this. Yeah, that'd be crazy. That'd be a terrible bear market. Anyway, let's keep moving. Let's go to the ETFs. XLF, again, kind of like the mid caps, trying to hold on here, right? Looks better than most. This $30 area is still the line in the sand. Everything else is just sideways chop. And maybe this will recover first. We'll find out. But holding up better than most. And on the week, it's probably positive. Yeah, it sure was. 0.74. Not bad at all. And then we're going to look at SMH. Now, SMH is going to be more like a Q, so it's going to be pretty nasty, right? And it was down almost 5% on the week, right? So what does that tell you? It tells me that things are, at least in the economy, not good at all, right? I think Micron had some weak guidance when they report earnings or something like that, and it really hit the chip sector hard. And you can just see everything is turning down and bearish. And if semiconductors are doing this, it's hard to have a bull thesis. Whether the recession is coming, not coming, doesn't really matter. It's hard to have a bull thesis with SMH breaking down. Transports, again, breaking down, right? Underneath all its moving averages, hard to have a bull thesis on the economy in general. And when the market's different than the economy, and I get that, but hard to have a bull thesis while this is in a sharp decline, though. XTN, home builders, holding up better than most, which is kind of crazy. They were down 1.25 on the week, but right at all its moving average, still above its 50 actually, which is kind of crazy. And I think it's I don't think all that supply shock has hit yet the home builders, because there isn't a ton of supply shock right now. Whether that changes, we'll find out. But looking at the chart, holding up better than most, surprisingly. Now, if it breaks down below 59-ish, that changes my thesis, but doing okay, which means, again, I use home builders for extension of jobs because they're one of the major producers of jobs in America's economy. So that's what I'm looking at the home builders for. And so jobs are not taking a hit yet, right? They're still employing people. They're still doing okay. Again, it's just a proxy. Now, the VIX, I believe, is broken because, it just isn't moving right. Not the way it used to. And zero date options may be the reason for that. But it's really, really getting weird out there with the VIX. I'm going to keep looking at it for a few more weeks to see if things start to normalize again. But a VIX of 21 with a pretty good sell-off this week doesn't make a ton of sense. But we'll keep watching it. Same thing for the put call ratio, right? You're getting this weird spike up here, right? Again, I think that's due to zero date options. We'll find out. I'm gonna watch it a little bit longer, but that's an anomaly, right? So let's see what happens. But we either would have to change parameters on here, right? That's a possibility to account for this, or maybe just use something else. But right now, I'm not using it as a signal because things have changed. But bond yields haven't changed. And when we look at bond yields, they're still consolidating, right? So as we go through the Santa Claus rally and as things progress, eventually it's going to have to pick a direction. And I think when it does, we'll be able to hopefully trade in that direction. Right now, it's just still in that consolidation mode. You'll get TNX, which is the 10-year yield. It's rising, headwind for stocks. Looking at the dollar. So I was looking at this falling wedge, and it hasn't quite broken out of it yet, right? And I don't know if it's going to. Maybe it just moves sideways here. Maybe it breaks down. But a spike up here is what we're watching for some major market implications. And so right now it's like right there. And maybe, again, it needs to get through the Santa Claus rally and start the new year for the major move to happen. I don't know the answer to that question, but if this does get a move higher, watch out for equities. They could get real nasty, right? So there's that. Percent of stocks above the 50-day. You can see it's down below 50, now at 42. There's room to the downside here, unfortunately. Again, maybe we get a retest of the 50 or better, during the Santa Claus rally. But if it even appears, but things are looking like they're still heavy on the market to room to the downside over there. And quick look at Bitcoin. So look how the volatility in Bitcoin is just really being taken out of the market. And that's weird. We haven't seen this type of, I don't know if we've ever seen that kind of decrease in volatility, right? Really, really, really tight price movement. So maybe the sellers are getting tired. I don't know. Um, maybe just no buzz around it. So there's not, not enough. Let's see what volume looks like. Yeah, I mean it's a little lower, but nothing crazy. I don't know. So Bitcoin is a signal, just kind of watching that. But it's just really interesting how it's gotten real, real tight the last few days. Real, real tight. So chances are from contraction comes expansion, and something's going to be happening there. So let's round it all up. Santa comes to town, doesn't come to town. We don't know, but what we do know is that things are starting to line up bearishly again. So if we do get a pop, maybe if you're interested in shorting, that may be an opportunity. If not, cash is your position. I think you're still in a risk-off scenario. January is going to be really interesting. The first week of January is important, and the month of January is very, very important as well. So hope y'all stay safe out there. Enjoy family. This is not the time to be a hero and be long stocks, in my opinion. Again, Merry Christmas if you celebrate, and we'll hopefully have a much better 2023. Y'all take care. Bye bye.